All right. So as I mentioned, we are going to continue on through the Unit 3, which we are all aware is compensation and benefits. And tonight we are going to talk a little bit talk a little bit about compensation and some of the laws around compensation. And then we are also going to, just so that you all can prepare, there will be some calculations in this lesson that we will talk through. And then we will have one for us to work on together as well. So, all right, let's take a look and let's get us up on our slides here. Unit 3, again, as we've mentioned this entire time, is going to be worth 17% of the exam weight. We are going to talk compensation laws and regulations. And then we are also going to talk about benefit programs. So those are the two topics that we'll cover. Not sure that it'll take a full hour, but it may. But just keep that in mind. And here are your learning objectives. With our learning objectives, we'll talk a little bit about FLSA, or the Fair Labor Standards Act. And this is a law that requires that most employees be paid at least the federal minimum wage for hours worked, and overtime pay is then at 1.5 times the rate of pay for regular work for all hours worked over 40 hours in a work week. It's important to note that this is 40 hours in a work week. And keyword here is it is hours worked. And the reason that I say that is because if a person takes off one day this week and makes up some of those hours and winds up working 44 hours the next week, you could be liable for that overtime pay, even though it's not necessarily going to be 80 hours in a pay period. So just keep that in mind as you're kind of thinking through FLSA. The other reason that I mention it like that is because if a person is working scheduled 40 hours and a holiday falls in that week and we're paying them for the holiday, that is not technically hours worked. And so even if they pick up another shift, they wouldn't necessarily fall into overtime pay. Again, just keep in mind that the FLSA is federal level, and so they direct you at a federal level, but if your local laws are different, you would follow those. Under FLSA, with the Fair Labor Standards Act, there is an exemption from both minimum wage and overtime pay for bona fide executive, administrative, professional, and outside sales employees. There's also an exemption for certain computer employees. These exemptions would be referred to collectively as the white collar exemptions. So to qualify for exemptions, the exempt employees would need to meet certain criteria around salary and job duties, while non-exempt employees would be covered by the minimum wage and overtime pay provisions of FLSA. Now, one of the ways that I remembered and made it easy for me to remember is exempt versus non-exempt. Exempt is a salaried employee who is exempt from overtime. A non-exempt employee is an hourly employee who is not exempt from overtime. Um, Therefore, the non-exempt or hourly employees are not exempt from coverage under FLSA. These non-exempt workers would be those who are generally paid on an hourly basis. So, blue-collar workers, machine workers, maintenance workers, construction workers, technicians, different laborers, semi-skilled workers. Job titles and salaries paid to employees in and to themselves do not determine the employee's exempt or non-exempt status. The real test here is based on the actual duties and responsibilities of the job. In 2020, they increased the salary threshold to $35,568 per year, or $684 a week. Exempt employee status can be found at a multitude of websites. It's a quick, easy Google search. There's a bunch of posters and all of that available for you. If you are interested in diving a little bit deeper into this, it's important to know that what an exempt versus non-exempt employee is. Um, the threshold increases what are executive, administrative, professional, computer employee, and outside sales exemptions. Um, I would not put it past to have some salary questions on your exam, as well as potential calculations. So we'll talk a little bit about calculations in just a little bit. Um, Exempt versus non-exempt specifically. So again, exempt employees are those who are exempt from overtime. They're not going to be able to earn overtime. Exempt employees do not earn overtime. They must satisfy two criterias along the salary and job duty test. Those that work in administrative, professional, and executive jobs or perform non-manual work, and their salary cannot be any less than $35,568. Non-exempt employees are hourly compensated employees who generally, again, will work in blue collar maintenance workers, construction workers, technicians, etc., as well as contingent workers. Employees would be eligible to earn overtime pay at a rate of 1.5 times their regular rate of pay for hours worked in excess of 40 hours in a regular work week. It's important to note that a regular work week is designed by the employer, and you just have to follow that consistently. Some overtime provisions that an employee must receive 1.5 times their regular rate of pay for, again, all hours worked in excess of 40 hours during a given week. And we'll define the regular work week as 7 consecutive days, so 24-hour periods. You can choose whatever day to start that week and end that week. And each work week stands alone for the purpose of calculating overtime pay. Again, so it's important to note that it's not per pay period, meaning that if an employee works and leaves for 4 hours early on one day and makes it up the following week, even though they went over in the second week, but not the first week, and they're still under or at 80 hours for the pay period, they would still be eligible for overtime on those 40 hours. So if you have any kind of makeup work policies or anything like that, it's just important to note that overtime could accrue there. And for people in certain industries, they may be trying to be lean with overtime and all of those additional pays. So it's very important to keep that in mind. Again, as well, just want to say it again, if there's a holiday or a day off, maybe it's a snow day or an inclement weather day, or the office is shut down and you're still paying that employee, even if they stay additional time over, quote unquote 40 hours. But they didn't actually work that 8-hour shift. It doesn't count towards their hours worked. So even if a person works 48 hours in a week with a holiday in there, they still may not have gone over those 40 hours. When we're talking about the regular rate of pay, this is important to note that it includes the basic hourly rate, plus any non-discretionary bonuses, shift differentials, production bonuses, and commissions earned. So again, keep that in mind. The regular rate of pay will include all basic hourly rates of pay, plus any non-discretionary bonuses. And the reason for that is when we're doing bonus overtime calculations, they may throw a bonus in there. So typically, when we're going through the calculations, if you haven't read already, you would generally take that bonus and spread it across their day to find out what their hourly rate of pay was, so that you can calculate their time and a half. So again, we will work on that. Next slide is actually one of them. So again, can't hammer enough regular rate of pay. Make sure that when you're doing that, I know that I had a question on my exam similar to this. Now, mine was PHR, so just keep that in mind. Yours is aPHR, so it may be different, but I did need to calculate kind of what that rate of pay was and what the overtime was. with the non-discretionary bonus. So just keep that in mind. So let's talk through an overtime with bonus. And so as you can see here on the screen, this employee is going to earn $10 an hour for a 48-hour work week, with a $24 weekly production bonus and 8 hours of overtime. So the reason that there's 8 hours of overtime is you can see here that they're doing a 48-hour work week. And so we know that we're going to pay 40 hours at their straight rate, and we're going to pay 8 hours at their overtime rate. So what we are going to do is we are going to take their straight time, which is 40 hours at $10 an hour. So we'll do 40. We're going to multiply that by their, oh wait, see, I'm already making a mistake. Let me erase this. I forgot the bonus already. So what we need to do first is we need to find out where this bonus falls and how much this bonus is getting associated in. So what we're going to do is we are going to take the bonus. Let me just put this back on pen. We have to take this $24 weekly bonus. So we're going to do $24, and we need to find out what this equates to in their hourly pay. So we are going to divide this $24 by the number of hours that they worked for the week, which is 48 hours. And with that, we're going to come to 50 cents an hour. All right. So this $24 bonus essentially becomes an additional 50 cents an hour because it is a non-discretionary bonus. And so we are calculating that into the regular rate of pay, which means that this person is actually, to make up for this $24 weekly production bonus, this person is going to be getting paid $10.50 an hour. All right. Does that make sense to everybody? Just want to make sure putting that bonus in there makes sense. Just give me a quick thumbs up. Perfect. Okay, great. And so what we're going to do is we're going to add that here. So it's going to be $10.50 an hour because of our non-discretionary bonus. We're going to multiply that by 40 hours that they worked at their straight pay, which is going to give us $420. All right. Now, to calculate the 8 hours of overtime, we need to take this $10.50 and find out what it is for time and a half. So we could take the $10.50 divided by 2 and add the two numbers together, and we would get $15.75. So $15.75 is their hourly pay for overtime. And again, we get that because we can do a calculation of 1050 divided by 2. Just going to pull up my calculator here so that I have my trusty little friend with me. And we get 525. And then we're going to take this 525 and add it to the 1050. And that's where we get our 50.75. Sarah, this is just that's just the way to determine what time and a half is. Just one of the ways to find out what time and a half is. So we would take the 1050 divided by 2 is 525, and then add the two numbers together, and we get 15.75. So this is what their time and a half rate of pay is, which is identified here. We're going to multiply this by the 8 hours of overtime, and that's $126. You can multiply it by 1.5, and that'll give you the full. There's so many different ways to find out time and a half. So you can take the 1050 and multiply it by 1.5% and get that, or divide it by 2 and add the two numbers together. Either way, you're still going to get that 15.75. So it's totally your call on what makes sense to you. I was never a mathematician. And so for me, that's just what I found was easier. And so we get that $126, and now we're going to add those two numbers together to find out what their weekly pay was. So we would get a total of $546. And so this kind of $24 weekly production kind of almost is there. And I don't want to say it's intentional, but it will kind of throw you off a little bit because you would think like what they want you to do is take this $10, find out what the difference is. And this will be one of the answers hypothetically on the test. I can almost guarantee it. They would want you to take that $10 an hour times 40 and get the 420, and then take that $15 an hour because that would be the time and a half for the 8 hours, add those two together, and then add the $24 on there and get another number. And that's kind of what they're going to have as an answer on the test, which is going to be one of those ways that they'll stumble you. So definitely just keep that in mind. You will most likely see that as an answer if you had this type of calculation. Overtime rate is time and a half. That is correct. Overtime is always going to be time and a half at a federally mandated level. Now, an organization could say to be kind of lucrative and have a good compensation package, they could say our competitors offering time and a half, we're going to offer double time. And so an employer may offer double time, but at a federal mandate level, it is time and a half. Yep. All right. So does overtime with bonus make sense? We're gonna talk a little bit more about it again. There's going to be a knowledge check with this as well. But again, I don't want you to get tripped up on this. Awesome. All right. Another calculation that we're going to be doing is overtime being paid on a piece rate. Now remember, the working 50 hours and produces 100 pieces at a rate of $4 a piece. And because of this, remember the work isn't always done in the calculation of the hours worked. Sometimes they'll do it by the pieces done. And so if this person is working and they're doing 100 pieces at a rate of $4 a piece, we would find their hourly rate to be $8. And to do that, we would take their calculation here of 100 pieces, and we're going to multiply that by the amount of money that they make per piece, which is 4, and we get $400. Now, with that $400, they're working 50 hours. And so we're going to take 400. I'm going to put it on a new line here. And we're going to divide it by the amount of hours that they worked, which was 50. And this is how we're going to find what their hourly rate is. So that's going to be $8 per hour. All right. And so now to find out what their overtime rate is, you're going to see again, they're working 50 hours in the week. So they're entitled to 10 hours of overtime. So we're going to take this $8 and we are going to multiply it by 40 hours worked. And we are going to get a total of $320. Now to make up for those last 10 hours at overtime rate, we're going to take the $8 and I'll switch it up for you this time. And we're going to do times 1.5%. And we are going to get a total of $12, which is this $12 is their OT rate. And so the $12 times 10 hours. So we're going to take $12 and multiply that by the 10 hours that they worked in overtime. We're going to get $120. So what we're going to do now is we're going to take, let me change this color just to make it a little bit easier for us. I'll change it to blue. We're going to take this rate of $320 and this rate of $120. We're going to add them together. Now, the reason that we're adding them together is because this is the hours that they worked. So $8 an hour at 40 hours, overtime of $12 an hour at 10 hours. We're going to add 320 and we're going to add 120 for a total of $440. So in this person's instance, who is working 50 hours and producing 100 pieces in 50 hours at a rate of $4 a piece, their weekly pay would be $440. All right. Now, again, one of your answers for this on the test will absolutely be, if this were a question, one of the answers on the test, I can almost guarantee it, will be the result of 100 pieces times $4 a piece. And oh, shoot, sorry, I just spilled my cup. One of your answers on the test will absolutely be that $400. All right. Give me just one quick second. I just want to grab a towel. I'm so sorry about that. And of course, it wasn't just water this time. It was a Celsius, so it's going to be sticky. So I just wanted to dry it up. All right. So does overtime on a piece rate make sense? How we calculated what this would look like, 100 pieces, $4 a piece with 50 hours of work. Perfect. Okay. So what we're going to do on the next slide is a knowledge check. And this one is going to be, you all can work on this on a piece of paper around you, or however it makes sense for you. Put your answer in the chat and then we will absolutely talk through it. So go ahead and read that question. If you have any questions on that, feel free to ask them. All right. I saw a couple of very quick B's there, so I'm assuming that this was a question you saw already, whether it was in a test or in the book. I'm sure you saw it. But that's okay. That is totally okay. We're gonna work through this. Does anybody want to come off of mute and talk through it, or do you want me to just put it on the screen like I did previously? Sometimes it helps hearing other people explain it, and so it's up to you. You could just tell me in the chat or somebody come off of mute. I will gladly do it though. Okay, perfect. I will gladly do it. All right, so let's talk through this. So if this were us sitting in an exam, and we are walking through this, we're going to read as a non-exempt employee. So non-exempt, meaning they're not exempt from overtime. So we are going to be Definitely calculating something about overtime there. Tim is paid a piece rate of $1 for each unit he produces. Last week, he worked an extra 5 hours on Saturday. So, regardless of what this looks like, now they could have made it a little bit easier if they wanted to by saying our work week is from Sunday to Saturday, but they didn't. So, we're going to assume that the work week was from Sunday to Saturday. Had they put in there that the work week was from Saturday to the following Friday, this would have been almost irrelevant because it would have been a new work week. All right. But they didn't. So we're going to assume here that their work week is from Sunday to Saturday. So this is the very last day of the work week. Produces 80 units on a Saturday, and he produced 370 units earlier in the week. All right. What would be Tim's earnings for producing 450 units in 45 hours? So they're putting a little bit of extra information there just to kind of do exactly what it seems like they did and trip you up a little bit. So what we're going to do is, again, as we think through what the hourly rate of pay for a piece rate, it's going to be, we're going to divide the money that they earn by the number of hours they spent earning that money. We're then going to calculate the overtime. So 370 units, which he produced during the work week, plus the 80 units that he produced later in the work week. So they split that out to kind of confuse you a little bit. All right. So we're going to first do 370 plus 80. And we are going to get a total of 450 units. Now, we know that he's getting paid $1 for every unit. So we know that based on that, we're going to take our 450 units and we are going to multiply that by the $1 that they earn per unit for a total amount of $450. That's not an 8, that's a 5. So he worked 45 hours, and he produced 450 units. So because of that, we are going to find out what his hourly rate of pay is, which in this calculation is relatively easy because the numbers just so happen to match. So 45 hours worked divided by the number of units. Well, I'm gonna switch that just to make it so that it's not a decimal. We're going to do it this way. So we're going to take the 450 total earnings, and we're going to divide it by the amount of hours that he worked, which is $45. Why I keep mixing that up, I'm sorry. Maybe I should stop drinking this Celsius. Ugh. I'm going to stop. Pen. All right. 45. There we go. So $450 divided by the 45 hours that he worked, and we're getting $10 per hour. All right. Now, we know that because he worked 45 hours, 5 of those are going to be overtime. So we're going to calculate his overtime rate, which is going to be 10 times 1.5. And we are going to get the $15 that he makes each hour in overtime. And so now what we're going to do is we are going to add the numbers together. So we're going to find out that with that, he's going to get his 5 hours of overtime and his rate for 40 hours at $10 an hour. So that's going to be 40 hours times $10 an hour, and that's going to be $400. And then he worked 5 hours at $15 an hour, which is $75. Now we're going to take both of his salaries here, his regular rate of pay and his overtime rate. We're going to do 400 plus his $75. And we are going to get an answer of $475. So his weekly rate of pay here is $475. All right. So as a
Another
non-exempt,
question.
oh yeah, go ahead.
I'm sorry, I didn't mean to interrupt you. So why don't we do this? So he produced 370 units, so that makes $370. And then he produced $80 more. So 80 by 1.5 is 120. $120 plus $370 makes $490.
Because we are calculating all of his pay at the same rate first. So doing it that way, you're isolating the work that he did on Saturday, even though that's part of his normal work week. And so it's all part of that 450 units that he produced during the week that he was working. So isolating it out, you're giving too much money because you're paying him overtime for the units that he produced on Saturday separately.
I don't understand. Why would be separate Saturday? Saturday is a weekend, isn't it? Overtime?
Well, you wouldn't get paid overtime just because it's the weekend. It depends on what the work week is established for the business.
Mm.
So that's why we're combining everything together. So we're finding out his 370 units that he produced during the week, plus the 80 units that he produced on the weekend for a total of 450 units. So he produced 450 units in 45 hours. So we have to take all of 450 units and find out what his rate of pay is in that time before we can calculate what his overtime is. We can't just give him overtime on the 80 units. It's all calculated
Okay.
together.
Okay. So I have to figure this out later. Okay.
So
Thank you.
that's yeah, so that's why we did the 370, which he produced during the week, plus the 80 units on the weekend for a total of 450 units in the week, in the entire week. And so paying him, you get the $1 for each unit. So that's 45, $450. And then we have to divide that to find out what his hourly rate of pay is, which is $10 an hour. And then we're only paying him the overtime on the 5 hours that he worked on Saturday, not necessarily by the units, but by the hours that he worked on the Saturday.
Okay. So I'm a bit confused, but I'll figure this out. Thank you.
And we can always talk more about it.
Okay. Sure. Thank
hmm All right. Does that make sense? 370 units with the extra 80 on the weekend, working 45 hours. Okay. All right. And Sarah, if you would, can you put in the chat what your equation was, like what your calculations you did to get that 490?
Yeah, my
And
calculation is, yeah, so, like I said, so he worked 370, for 370 units that he produced, he gets $370. And for the 80 hours that he put in, 80 times 1.5, because we calculate the overtime, and then $370 plus $120 gives me $490. That was my calculation.
okay, put it in the chat so that I can take a look at it, but I
Sure.
think I know what you're doing. All right. Awesome. So let's talk a little bit about record keeping. And with record keeping under FLSA, it requires us as an employer to keep records for our workers of wages, hours, and other related items. And so with that, we need to keep our personal information, including names, addresses, occupation, gender, date of birth if under the age of 19. Generally, this is information that is collected from an application. The time cards, so the hours and the days of when the work week begins, total hours worked in a work day and a work week, and based on how you kind of do your time cards and your hours worked, whether it's an electronic kind of like time clock or a punch card, you would need to keep those. The total daily, weekly, straight time earnings, so your payroll information. The regular hourly rate of pay for any week when overtime is worked. Total overtime for the work week, deductions from or additions to wages. Total wages paid in each pay period, and date of payment and pay period covered. So all of this is pretty much done through your timekeeping in your payroll system. And so if you are doing like, you know, sheets, I don't know, sign-in sheets, you would need to keep those if that's what you do timekeeping based off of. Um, but if you're using like a electronic time clock, then you would be able to use that information. We have equal pay and permissible differences. So, under the Equal Pay Act, it prohibits employers from paying members of one sex less than members of the opposite sex for performing equal work. Um, this was coming up a lot in the past couple of years. And this kind of relates a little bit to like that whole glass ceiling concept that we talked about earlier, where women feel like they hit the glass ceiling, there's nowhere to go. Um, Same thing, equal pay for equal work. And under this, there are some exceptions. Again, you see that bona fide, that word bona fide. So, bona fide seniority system where wages or salaries are based off of the length of service. Merit pay system where pay is determined by legitimate performance measures. A system that measures earnings by quantity or quality of production, and a differential based on any factor other than gender, such as differentials between regular and temporary employees or geographic differences. Geographic differences we do oftentimes see, especially if people are working for a company that's like a national company who may be in multiple areas. For instance, like, I know here in Philadelphia, we see it oftentimes. Like, if you work in Center City, Philadelphia, you oftentimes kind of get like a little bit more because of where you work as opposed to working in like one of our suburbs. Um, there are a number of different reasons for that. Um, the other thing is, um, a company like, say, Facebook or something like that, where they have employees working in California, where the cost of living is drastically higher, as opposed to, say, a small town in Tennessee or a like rural area where cost of living is significantly cheaper. You may see pay differences there as well. With pay, oftentimes there are laws. I know Colorado is one of them, but I think New York has recently become one of them, where you do have to give your pay range and your salary ranges um, on the job postings. And so definitely keep that in mind as you are kind of working through the HR space. We also have comparable worth controversy, and with that, it focuses on companies whether or not they should be required to set a common set of criteria that evaluates the worth of jobs and then provide equal pay for jobs for equal worth. Um, and so this is a legal controversy that's around, and really just centers on the issue of whether or not organizations should be required to evaluate the worth of the jobs according to the common set of criteria and then to pay all jobs for comparable worth at the same rate. Oftentimes, you'll see this controversy with when places have numerous jobs that are traditionally dominated by women. Again, nurses, school teachers, secretaries, etc. And pay would be considerably less than jobs that are traditionally dominated by men, such as doctors, truck drivers, mechanics, etc. Most courts are reluctant to recognize the comparable worth theory because of the legal and practical problems involved. And so, it could potentially set a precedent, but just keep that in mind. Here's some information on employees versus contractors. Now, for some of us, we may never see the area of a contractor coming into our space, and for others, we absolutely will. So, as an employee of the company, you must obey the instructions concerning when or how to perform the job. You have an ongoing relationship with the company. Again, you don't necessarily see contracts with this. Companies set the work hours. The company requires full-time work at its business. The company controls where the work is performed and how it is done. And the company then provides tools and materials to do the work. Whereas a contractor is responsible for the outcome of the job and how it is done. The contractor advertises and makes services available to the general public. Could or usually does set their own hours, able to work for multiple companies at the same time, complete tasks at office or home, and decide how to finish the job, and provides their own tools, materials, and facilities. And so, for instance, you'll see when you're looking for jobs, oftentimes you'll see this is an I-9 job, which would tell you, that you're most likely that you're going to be an employee, you're going to be hired by the company and on the company's payroll. And you may also see that this job is a 1099, which is generally a contractor. And so, for instance, at my organization, I'm an employee, but with HR.com, I'm considered a contractor, so on a 1099. All right. And so there are vast differences to the employment relationship. One of the things that you need to keep in mind if you do have contractors around you is co-employment laws. And co-employment laws pretty much say that, like, if you treat a contractor as an employee, you could be liable to have that person as your employee. So, like, oftentimes if we do like employee appreciation week, or we do like an event or something like that, we oftentimes will filter out contractors from that because we wouldn't want them to think, if we're celebrating employee appreciation day, we don't necessarily want to be like, in your face employee appreciation, thanks for everything you do, because we could violate co-employment. All right, let's do a quick knowledge check to wrap this up. The equal pay prohibits employers from blank. All right. All right. So I see a majority of the answers coming in at C, which is paying members of one sex more than members of the opposite sex for equal work. The keyword here for anybody that got tripped up is, darn it, is prohibits. So, again, paying different amounts to employees based on geographic differences is absolutely doable. You're allowed to do that. Again, as I mentioned, somebody working in the Silicon Valley in California, as opposed to working in a rural small town somewhere in, say, Tennessee. Um, and so paying members of one sex, again, you should not be paying members of one sex more than members of the opposite sex that are doing equal work. And so the Equal Pay Act prohibits you from doing that. So the key word in this question is prohibits. If this word was allows, you would have a different answer, but the fact that they're asking what we're not allowed to do under this law is how we got C. And so the textbook definition is the Equal Pay Act prohibits employers from paying members of one sex less than members of the opposite sex for performing equal work. Jobs are considered equal if they require equal skill, effort, responsibility, and if they are performed under similar working conditions. All right. So that is the end of that unit. Um, and just to acknowledge in the chat, Deirdre, you are correct. Sarah, the looking at your math here, the 370 by a dollar is 370, 80 by 1.5. You're calculating the overtime by the units, which is what I had mentioned. You're not calculating it by the hours the person took to produce those units. So that's why you're getting a significantly higher number. All right. So taking a look at the next part of our presentation here is going to be about employee benefits. As we mentioned, when we're talking kind of total rewards are absolutely more than what our compensation is. All right. So the total rewards for an employee, many of our systems will allow us to generate total reward statements. And when we do total reward statements, you're going to see things like education assistance and health insurance premiums and our salaries and our overtime. But you're going to see all of the benefits that we offer listed in there. And so your total reward statement may be $10,000 more than what you make a year, but that's because it's looking at all of the things that are offered to you as an employee outside of just your salary. So part of our total rewards is going to be employee benefit programs, and we are going to discuss, these are your learning objectives. And we are going to start our discussion here around required benefits. So, as mandated by the federal government, employers are required by law to provide three benefits that are intended to protect an employee's income. Remember, employees are looking for security when they come to work, and they want to know that they're getting paid to do the work that they're doing. Those three benefits are Social Security, workers' compensation, and unemployment compensation. So, with Social Security, the goal there is to force employees to save for retirement during their working years. Workers' comp is to provide income continuation for injuries that happen on the job and reimbursement of accident expenses. And then unemployment compensation is there for when there's need for short-term compensation based off of layoffs, reduction in force, terminations, etc., of workers while they start to look for new employment. So breaking these down, we have Social Security benefits. Social Security benefits and the contributions there are derived from taxes that we collect under the authority of the Federal Insurance Contributions Act, or FICA. And so you'll oftentimes see these on your W-2s. Employees and employers contribute to the tax. There are three basic categories for Social Security benefits that are paid upon earnings. So we have retirement, we have disability, dependents, and survivor benefits. All right, so retirement, disability, dependents, and survivor benefits. Medicare would be slightly different from these benefits because it offers protection for people 65 and over from the rising cost of healthcare. You can get lump sum death benefits, worker benefits if you retire, if you become disabled, and of course, deceased. The other benefit that we just mentioned was workers' compensation. Again, this is to provide income continuation as well as any accident expense reimbursement for employees that are offered on the job. This is administered by each state, so does have laws depending on what state you're practicing in. And so if you have a company that you're supporting HR for over different states, workers' compensation could be different in all of those states. The basic concept for workers' compensation is liability without fault, meaning that if there's an injured employee, they are entitled to a moderate and reasonable amount of compensation, regardless of who causes the accident. And the second underlying concept is that compensation is part of the expense of production, and therefore it's chargeable to the employer. As an employee, they should not be paying your workers' compensation. Um, you, as the employer, it's a cost of doing business. Unemployment insurance provides short-term financial assistance to people that are laid off and seeking additional employment. There is FUTA, F-U-T-A, which is the federal unemployment tax. All taxes are paid by the employer. It's a combination of federal and state taxes. The federal tax is 6% of payroll up to a certain limit. State employer contributions are normally based on the amount of wages that they paid, the amount they contributed to the fund, and the amount that their discharged employees have been compensated from the fund. The important thing here is that it applies to any employer who has more than one employee for 20 weeks or more and pays wages of $1,500 or more per quarter. So just keep that in mind. This applies to almost everybody. Employers pay 6.2% of their payroll tax on the first $7,000 of annual wages. And unemployment compensation costs would be absorbed by the employer and depends on the number of employees that are drawing on the funds, which is our experience rating. If you have a bunch of people on your payroll that are collecting unemployment, that's where your experience rating will drop. And that is why, as an employer, you also have the ability to dispute unemployment claims. And so if you know a person willingly left the organization and filed a unemployment claim, you do have the ability to defend that and have that claim denied. A little bit about pension plans. We have a defined benefit pension plan, we have a defined contribution pension plan, and we have a cash balance. The defined benefit pension plan is company funded only. The contributions are derived from a formula that combines salary and years of service. This does not have separate accounts maintained for each participant. The defined contribution is typically what you will see in many employers. The defined contribution requires that there be a separate account for each participant, and the money that's put into these account comes from both the employer and the employee. And so if you have like a 403b or 401k and you do matching and stuff like that, that's usually going to be a defined contribution. And then a cash balance is a combination of both of these, allows the individual accounts that are portable, that are employer funded, but also insured. All right. We have an individual savings plan, which are deferred accounts that are approved by the IRS and are called qualified plans. With these, you get different tax considerations. And so oftentimes, your contributions to some of these are, pre-taxed. And so it lessens the tax burden on the employee. And so Social Security is a benefit that we would get upon retirement. Now, many of us know that they estimate that that fund will be depleted by the time many of us are able to retire. And so individual savings plans are absolutely important. So when you choose the appropriate plan, you will be able to successfully plan for your retirement. Most people, the easiest and best place to start is through a 401k. This is where money is withheld from payroll deductions. And there are several plans that you could also be involved in. They can include IRAs, SEPs, Roth IRAs, et cetera, et cetera. The thing is, as I mentioned, the qualified plans are under the IRS, and with that, there are tax benefits to those. In 2020, the total employee plus the contribution limit has to be less than 100% of the employee salary, up to a maximum contribution of 57,000. The 2020 employee contribution limit on a regular plan, 19,500. That goes up I don't want to say it goes up every year, but it does go up. I believe let me look and see what it is. I just talked about this on Monday. I feel like it's 2100, 20. 2024 IRS. 23,000. So it went up from 22,500 last year to 23,000 this year. And so that does go up. The employee cannot exceed that 23,000 unless they're on a catch-up plan, and that's usually not too often, but if they're on a catch-up plan, it could be up to 75% of their salary, which would obviously be pretty hard to live off of. 401k is typically in a for-profit institution. 403b is a typically non-profit organization. And then IRAs are individual accounts. And so you will most likely see either a 401k or a 403b if you are going through an employer plan. Here's a knowledge check for you. Go ahead and toss the answer to this in the chat, and I will pull up the chat. All right. So I'm seeing C in the chat, which is good for me because that means you are correct. And so a defined contribution pension plan requires separate accounts for each participant. Typically, both the employer and the employee contribute jointly to the pension fund. As I mentioned, I will read the textbook definition for you of this question, which is a defined contribution pension plan or a contributory plan requires a separate account for each participant, and the money that is put into these accounts typically come from both the employer and the employees. Let's just talk really quickly about the pay for time not worked. Again, we talked a little bit about this. People that are working but not getting paid but not actually at work does not count necessarily towards overtime pay. And so we have paid holidays, paid vacations, personal leave, union activities, sabbatical, funeral, volunteer hours, jury duty. All of these things are reasons that we would code in our payroll system that the person worked, should be paid for the day, but didn't actually work. And if this were the case, then of course any of these things would be taken into consideration upon overtime calculation to determine whether or not they actually worked over 40 hours that week. Recognition and achievement, recognition and appreciation, again, another kind of soapbox that I can stand on. Organizations could use a different variety of recognition programs to influence attitudes and behaviors of employees. It is really, really, really key to know how employees want to be recognized, because you can potentially do recognition wrong. If a person gets easily kind of like embarrassed or doesn't like to be the center of attention, and you bring them on a stage to give them an award, likely they're going to be embarrassed and they're not going to take that the same way as somebody who is extremely outgoing and would like to put themselves out there like that. And so it's really important that you understand how people like to be recognized and offer it in a number of ways that the person can receive accolades, whether it's easy through, like a box or an email system or a call out or a shout out. But again, just keep in mind that you need to recognize people the way they want to be recognized. The last thing I have for you, which is just on time, is our last knowledge check. And then we will break for the night. Wow, answered that one really fast. I see coming in the chat D, which is correct. Which of these benefits is optional? Keyword there's optional for an employer to provide. The correct answer is D, a pension. Employers are not required to provide pensions to their employees, but they are required to abide by the extensive laws governing pension plans if they choose to provide such a plan. Again, Social Security, workers' compensation, and unemployment compensation are three required benefits set forth by federal laws. All right, so that is the end of this lesson. Next week, we will talk about healthcare benefits and start to wrap up Unit 3. So I really appreciate your time. And hopefully, if you are doing anything this weekend for St. Patrick's Day, have a good St. Patrick's Day. The weather's supposed to be nice, so definitely enjoy that. And I will see you back here, same time on Tuesday the 19th to wrap up Unit 3. Have a great night, everybody.